Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, August 7th, 2019. Want to do a quick update on the markets and some of the other things I'm watching right now. This is ES, the S&P 500 E-mini futures. Right now, we're starting to take back that trend line. I had posted these two levels, this horizontal minor support and minor uptrend line here. We've had a flush out move early in the right after the market open, and then snap right back above there. So at this point, if they don't reverse soon on the back test of this trend line, that's going to open the door for a move up here at about 28.33. Now remember that 28.33 on ES, which we're looking at here, the S&P 500 futures, that is the bottom of those big gaps from the other day. This is where it was tested yesterday. This is where we tested it again at that level in pre-market. You don't see the gap because we're looking at the futures, but that gap is right here where the SPY gap down. So that would be that level. We've already tested it twice, so if they get there again, then there's a good chance they're going to pop in and try to at least enter the gap, maybe even make a backfill of the gap. We'll see. But my plan hasn't changed. On the swing positions, whether we continue up, I'll continue to scale in strategically. What does that mean? Well, the next objective level, although this is resistance, it's minor resistance. This is a much more significant level. That would be the next resistance. So you can short there. If you backfill the top of the gap, you can short there. Or if we reverse and undercut today's lows, and then especially the lows from the other days, that would open the door for more selling. So let's look at NQ, and then we'll go to the SPY and ES real quick. NQ, they've already regained that level, and they're making a run now towards that towards those recent highs there, around 75.55 or so. And again, you don't see the gap here. Let's take a look at QQQ and SPY real quick. Okay, this is the story right now of QQQ and SPY. If you look at it this way, it shows the regular session trades. This is our range right here, and this range will be resolved sooner or later. And again, I still believe whether we pop to the upside and make a backfill those gaps, or move to the uppermost, that's my top of my expected bounce target zone maximum, I should say. This is my preferred, the bottom or the top of the gap. So far, we failed at the bottom of the gap. I still believe we're doing this, and like I said, if the charts start to convince me we pop above here, we go up much more, technicals change, then my views will change. But as of now, I'm viewing any strength or weakness as an opportunity to continue to add on to swing short positions, which I had reduced when we hit those key supports the other day. So those are the levels to watch, and until then it's been somewhat of a chop fest within that range. So to keep it very simple, maybe to oversimplify things, a break below that range should open the door to the next leg down, whereas a pop above it would open the door for a possible backfill of the gap. I would also say this, excuse me, if you're looking to, let's say, short a backfill about 186, you probably want to step in a little early, because there's going to be a lot of eyes on the top of that gap if we happen to get there. So whether we do or not, let's see where it goes. SPY right now is, again, same story. When you look at it this way, I'm trying to box it in there. That's 288, roughly 288 and a quarter is the top of the gap. And so if we enter the gaps once entered are often backfilled. And then if we reverse and break below the bottom of the trading range, that's going to be pretty bearish, because we've had this period of consolidation. But more so, those are the 60-minute charts. Bigger picture says this. As mentioned the other day, SPY and QQQ both hit their 200-day exponential moving averages. SPY had undercut it briefly intraday, but closed right on it. That was Monday. Yesterday we rallied, from there. We stopped right at the bottom of the gap, and today so far we undercut it once more, but we recovered and we're above it. So the point is, on this more significant daily chart, both SPY, QQQ, they're holding above those 200-day EMAs, and again, all those market-leading stocks that I highlighted, the FANG stocks and all those, they hit support. So you have buyers coming in there. Those stocks, this is the best, I want to say the best buying op. That wouldn't exactly be accurate in my opinion, but it is the biggest pullback that we've had in a long time. Every time you get a big pullback, there's people that always want to buy Apple. They want to own Apple and Amazon and all those stocks. And I have to say, from pure objective point of view, it's objective. You want to buy them oversold at support. And to me, it's just a matter of how far does the bounce go. I still maintain or believe that this is a start, especially the way this kicked off, the start of a much bigger drop. The hard part is, what are the zigs and zags going to look like? And if I'm wrong, we're going to retake 294 and then go back above the previous highs, and this then did prove to be a buying up. But again, a lot of evidence to me says to the contrary, that it's just we're going to have, we had an oversold bounce. Like I said, the RSI hit oversold. This is the deepest oversold levels we've been since the December 24th lows. We didn't even, get all the way down to the 30 level here, and we crossed a little below it right there. So that's it. Again, a little consolidation, working off the overbought conditions, volatility for sure, and you can use that volatility to your advantage. I'll tell you, whether you're a bull or a bear, scale in. If you're a bull, you buy pullbacks to support, for example, those lows. Or you can buy a breakout if we enter the gap. That'll be a breakout. And a breakout again if we continue to move up through these levels. And if you are bearish, thinking there's more downside, then you can short bounces up to resistance with a stop somewhat above in case it doesn't prove or doesn't work out. So that was SPY. Let's go back to those daily charts. QQQ. There it is, same story. You can see here, we'll turn off all the trend lines. There's a 200 EMA, held like a champ, bounced off at once, hit it again, bounced today, and we're kind of between a rock and a hard place, if you will, or what I call no man's land. We have resistance right overhead, the gap. There's the bottom of the gap. Support just below, not just the 200-day. I will put a higher weighting in the fact all those market-leading stocks that I pointed out the other day were at pretty solid support levels. So that I'd even put a higher weighting, but it comes in as well with the 200-day here. So that's the story. Pretty simple. Maybe oversimplifying it, but you take this trading range and the next sell signal that should open the door to another powerful impulsive wave of selling will probably come when we break below that, whereas a break above I think will be limited. It might be impulsive buying, but I think the upside be limited if we do pop above it. And that's my views now. If they change, I'll let you know. All right, let's talk about a few other things, because trade ideas are light and they're going to continue to be light with the volatility in the market. It's easy to make money on QQQ and SPY when they're moving up and down 1-2% a day. We're not in those trading ranges. When we were back here, you can't really swing trade and get a whole lot out of this. But swing trading, you can make more once volatility expands. So that's let's go back to start with Euro US dollar so I can hit on the precious metals. Laid out a scenario a couple weeks back before it even happened. I said usually when you get down to a well-watched support level like this, and based on the way the charts looked, said I wouldn't be surprised to see this scenario where you get exactly what happened. I laid it out, an impulsive move down. I said if you break that support, it'll be impulsive. You probably get a big red stick because it's a well-watched support level. This is a textbook bear trap. The high volume means that longs gave up, they capitulated, they stops, they threw away the towel, their stops were hit or they sold out, and bears jumped in thinking, oh, that's a big breakdown, and it was. But like I said, that's stage one of a two-part process. Stage one is the breakdown, and it's the charts, everything else that told me that you would probably get a reversal. Stage two complete. We've regained the level, and as I said, if we regain the level, what you ideally want to see is impulsive buying. What that is, it's these shorts getting roasted, a short squeeze. They realize they were wrong, and they're getting out. The longs who were in bullish, back here with the bullish falling wedge breakout and back test, they realized, oh, you know what, they got me. The breakouts held. It was just a little whipsaw signal. So, and I mentioned this to someone else in the trading room who asked about, an update on gold and silver, who said they have a pretty large position. the precious metals are a big part of my core holdings. We don't have it as an official trade on this site because it's been, just like the stock market recently, unusual that we've had a lot of what I call soft entries. A hard entry is, a lot of the trade ideas that I'll do. Let's say you have a wedge pattern, something's wedging up like this, and then you have maybe a horizontal support level. I'll say a break of the wedge or below this support level here will trigger a long entry. We did have wedge breakdowns, but it was on the Fed day and the next day the Trump tweet. But all along I posted my thoughts, and like I said, official, unofficial. I'll tell you what I see, what I'm doing, where I think the opportunities are. And when volatility spikes like this, guys, keep in mind, I am super busy, hyper focused on going through the charts of not just the broad markets, but dozens and hundreds of individual security sectors, commodities, currencies like this, trying to do my best to keep up with questions. So the official trade ideas take a long time to mark up, and in a normal trending market, you're going to get more of those. So right now, like I said, I'm doing this video to share where I think the opportunities are. I've been, persistently bullish on gold for a long time and saying it's just a core position, a great way, and this only helps, this breakout. So my next target is going to be that downtrend line. As I said, it was already hit once, and that comes in around this 113 level. If that breaks, then we come all the way up here, I believe, to about the 115-ish level. And so far I'm liking what I see on gold. Yes, it's overbought, but as I said, that's the thing about gold. When it wants to run, it's done it in the past. It did it back here. When it wants to run, it can really run. And I've seen nothing but bullish development after bullish developments. This is my weekly chart. If you're new to the site, here's a downtrend line, big giant symmetrical triangle pattern. I said bullish breakout, back test. My first target was 130. That was all the way from back here. We hit 130. Consolidate a little bit and we're off to the races, and I don't see a lot stopping gold till it gets to 151. There will be pullbacks and corrections along the way. I can't tell you exactly. Sometimes we can hone those in on the the charts, the 60-minute and daily charts, but like I said, if you're a long-term trend investor, long-term swing trader, trend trader, etc., this, I think, makes sense in a portfolio, and it only looks better now besides the euro giving me that bull trap scenario and what I believe to be a major top in the US dollar. Here's UUP, the ETF that tracks the dollar index. Looks better here, weekly chart. Big bearish rising wedge pattern, breakdown, back test. The dollar is at its all-time high back here. You can see this dollar ETF 2680. That's where it's topped back here. It had that big drop. So you're at resistance, overbought with negative divergence. It's really the euro US dollar chart in reverse, upside down is all it is, and that's it. So here's a case from the currency perspective, because a falling dollar is bullish for gold. And then the other thing is, of course, my outlook for the stock market. When you take the longer term view, everything that's happened, if we continue to sell off, gold will most likely continue to catch a flight to safety bid. If you're not in it already, or you are and you want to add, what do? Well, I think you just scale in. I pointed out the divergent high, and this is, by the way, another thing. I always tell you guys I like to assess the charts as they develop. And so, for example, back here I mentioned gold is like a pullback. I might even have mentioned as a short trade. I definitely got out, and we had an official trade. We got out right before that. I expect the pullback. This time around, I had zero desire to short, because what I said at the time is that gold can and often will, when the trend is very strong, or any security, it'll burn through divergences. So although they're a big part of my trading, and I did point it out, and we did, don't get me wrong, we corrected. That was a decent correction, but it was very minor. So what I'm getting at is, when I say I like to assess the charts as they go, what that tells me is the nature of this rally is strong. It burned through. The divergences only played out for a very minor, shallow, and brief pullback with an impulsive move followed there. So I like what I'm seeing in gold. And the stock market, on that, or the way I assess, in this case, a correction, is when support levels, well-watched support levels, it should, quote unquote, should produce a reaction like 294, for example, on the pullback. That was the previous highs. Breakout right here. The reaction was very little. We parked there that day, and the next day we gapped down below it. Then we hit this trend line. We had a little brief reaction that day. Not what I wanted to do. Give you the trend line. We bounced off that trend line on the initial tag, but then guess what? We gapped below it. So when I see well-watched important support levels have very little, if any, reaction, and we keep going through, it tells me the nature of the trend. So right now, this has been a pretty impulsive sell-off. Nothing goes straight down forever. Like I said, all the reasons we hit support, oversold. So I would expect once this consolidation oversold, I wouldn't even call it an oversold rally. It's more of a consolidation period as of now. Maybe we go up and backfill the gap, and then we get a little more rally. But if and when it resumes, and we undercut those lows, then I would expect the next move down to be quite impulsive. Actually more impulsive. It's usually the initial wave, is especially if we get a bigger, like a 5-wave count, bigger move down. The initial wave is usually not the strongest one. So like I said before, at the very least, looking for another leg down, even if it's just an ABC correction. And we'll get back to that later. So that's the stock market. I already covered that earlier. So I shared my thoughts on gold, silver, same story. I'm really more eyeing the weekly charts now. If you're new to my analysis, this is this trend line I was watching on silver. We had a very impulsive breakout. We were back here, and I stated how gold had already rallied up much more than silver, and that silver was poised to play a game of catch-up, and it has. It's outperformed gold since this run-up breakout, and you can see it's charging on up to this next target there, about 1634. SILJ is still an official trade. These mining stocks, junior miners. There it is. Heading on up to that, coming up to the second target now after already hitting our first target here, consolidating around that level and moving on up. So what else do I want to show you? And nat gas is one to watch, more of an active trader thing. So I sometimes I'll post these on the front page, but it moves so fast. Active traders can get in and out real quick. If I see the next swing trading op, I might put it as an official trade. So I posted this in the trading room. When was this? All the charts are time and date stamped. August 5th. So a couple days ago, said there it is. Nat gas put in another divergent low and could run on a break of this downtrend line. So there's your buy signal. I had intersecting downtrend lines there, coming up to the 2117 target, then the 2144 target, and then ultimately up here to 2193. That was back then 2 days ago. This morning I posted an update in the trading room. We just hit my 2114 target, and that's a pretty good gain for nat gas. If you trade nat gas, that's probably going to put a couple, at least over $1,000 per contract for sure in your pocket. And if you trade UGAS to pretty healthy gains. And and then said, basically I said likely to get a reaction there. You can see because that's a pretty well-defined resistance level, and so get a pullback and then another thrust up. So again, if you're an active trader, let's see where we're at now. That's NQ. Nope, we already looked at that. NG. We've got a ton of charts down here on a different monitor. I need to find that one. Here it is. Let me pull it over. NG, and that's it. That's exactly what happened. We hit that 2114 target I just showed you, pulled back. And now, so you want to watch, there's a minor uptrend line here. It depends how you're trading it. You can either, if you're long, set a stop below some of these reaction lows. Depends on your entry price. Or go long here for the next thrust up. We don't have any hard buy signals yet, but that's probably going to come once we break. Like I said, the next buy signal comes on a break above 2114, and that should run us up there. So far that's been good for a, what is that, a 3.4, 3.5% gain so far to that target. I haven't yet completely given up on coffee. I'm not posting a lot of updates because it just needs to get a little kick in the pants here. There's this downtrend line, pretty clean, and actually just like nat gas, actually too, a little minor downtrend line and a larger one coming in together. Same story with the natural gas, or divergent low. So if we get a pop above here, you can see these are the next targets for coffee futures, and that brings me up to, JO is still an official trade. It's still, in the last update, And in several previous updates, I said, oh, you know what? I haven't even looked because I must not have a price alert. Well, let me see if that's a stop on a daily close or a I raised the stop. I believe I raised the stop after entering that, and I see 32.49. I just now noticed that candle went there the other day. I trade coffee futures, so I didn't have an alert on this one. That may be a daily close. Either way, it doesn't matter. It's still something to watch. So this would be that downtrend line on the 60-minute chart of KC I just showed you, coffee futures. So you get a pop above there, and we're still above the lows in coffee. So that's one to watch. And again, we had a nice gain on that. We were in here somewhere and hit our first, second, and third targets, and that's a long-term target for the long-term trade. These were more swing targets. And the pullbacks at both of these points were expected and highlighted at the time that we'd probably get a pullback based on the posture of the 60-minute charts at the time. So again, coffee's on watch for another. And if that was a stop on any move below 32.50, then I'll go ahead and stop it out. I may add it on as another official trade. Otherwise, we'll just leave this one on for now. And stocks, I've spent a lot of time in the recent video going over and explaining, in the long-term charts, just how lucrative the trends can be to swing trade long or short the semiconductor sector. And also laid out, the current bearish technicals, everything else. So like I say, official, unofficial, the trade, when tech broke, the market broke, QQQ, SPY, SOX, they've all broken down, giving us sell signals. And just like the stock market, it's consolidating. To me, it's just a matter of, is the consolidation almost over, which I believe so. We already kicked back to that 199 resistance level once, and so looking for the next leg down. Maybe I'll throw SOXX on as an official trade, but I can tell you right now that you can see I think SOX is coming down here to 175.75 near term minimum. I think there's more potential longer term. That's about another 10% drop, so SOXX should be 3 times that, about 30%. This is what SOXX, this is the short, 3 times short semiconductor ETF. I'll often use this as a proxy, and the reason is the couple things, it tracks the same index SOXX does, and also if you have, let's say, a cash account like an IRA or a account that's not margin, you can't short, you can buy this to gain short exposure on the semis. So this is just one big falling wedge pattern that projects quite a bit higher if and when it breaks out. So that's the semis, and again, we'll watch that. But the safe bet, if you don't have a position yet, if you've not been scaling in, wait until the markets break down, trigger those next sell signals like I told, or even kick back a little to the next objective short entries, if they want to backfill the gap. That would give you a better entry on SOX and SOXX, things like that. And then finally, I'll update wheat. Listen, the ag commodities, the momentum is out of those. It's to the downside right now, and that's why I've slowed down on my updates. But I'm still tracking these, still considering. We had an official trade on wheat earlier in the year. We caught most of this run up. These are wheat futures, by the way, ZW. And it's setting up for the next move, but the momentum's not there yet. And just like coffee, you have a very clean downtrend line. You have bullish divergence. Just as you had back here, divergent low, that led to this rally and this rally, just like this divergent high, and that's when we got out of wheat. We got out near right at the top on that one. That was if you don't trade futures, although I always track the futures. I like to trade futures, but I'll trade ETNs depending on what account and what time. But I'll use the ETNs as official trades. This is what wheat looks like on the daily, and so you can see we last took it on this bullish falling wedge breakout, got out here at our final target, went up a little bit higher, hit that resistance level that I had set the final target. This target was set adjusted below here because with the ETNs, you have to go by, you really have to keep an eye on the futures because that's what they're doing. They're rolling the futures contracts. So I'll be a little conservative sometimes on those targets. And but that's it. We pulled back now, had a nice pullback, and we're still well off the lows. So that's one that's on my radar for another official trade as well. And again, once we get the momentum in the sector, you'll know it. This is, these commodities, and like a lot of securities, there are sideways periods, and then you just stay away or you wait for a breakout of a range. But then for the most part, they're either trending up or down, and this is swing trading we try to do. And this is why I've been highlighting it for a while now, but no official trades since we closed this last one. We're trending lower, but the trend will likely change if and when this current downtrend line breaks and these momentum indicators start to perk up. Right now they're pointing down. That's the PPO is a momentum indicator. It's saying the trend is down. So I'm watching it, and again, that's a setup. So what's actionable right now? Gold, silver, the miners, short equities. That's most of where my money is right now. Positioned, for swing trades and things like that. Treasury bonds, we took a shot, not going back into those for a while. There'll be a reversal coming. It'll be a big trade on those. Treasury bonds are a very overcrowded trade, but I'll get to that later. Just waiting for the right moment to re-enter that. So let me wrap this video up, get it out to you guys, and again, the big money to be made right now, I think, is the easier trades. It's easy to trade the markets when you have this kind of these clear sell signals and volatility is spiked up. So we'll watch this, and again, watch for really an impulsive break down below the recent lows, and then I'll leave it at this. If you are the mindset, because if we do reverse and break below those recent lows, it's going to be, like from where we just went up to around the top there, we'd have to drop from where we're at now another 2.5% or so to undercut those recent lows. And so at that point, you might be thinking, wow, we're too oversold to chase. The daily charts are still oversold. I don't want to short there. That's not objective. What I would say to that is oversold can and quite often does become a lot more oversold. I'll give you an example right here. We hit oversold right there. In fact, we were much more oversold at this point. We had a counter trend rally, given it was more. It was enough to work off the oversold conditions. But from that point alone, there was another 14, almost about another close to 15% downside in the market to come. So it's a matter of, again, what I said earlier in the video, you have to define your trading style and what you're going for and where your targets are. If you're willing to ride out the counter trend rips and ignore this noise, these little zigs and zags, then you can capture the big reward. Otherwise, like I said, if you get nervous on every time there's a kickback rally, 3, 4, 5%. Some of these were even 10%. So again, you have to look out and say if you believe that the market might head down, where I think it's ultimately going down here to those 2015, 2016 highs. I can't say that with the highest degree of conviction yet because my long-term trend indicators have not rolled over. We haven't broken some of the long-term trend lines. But in the very near term, if I want to say what I can tell you with a high degree of confidence, I think we come down at least right here, and that's another. I'll even go from a little lower where we're at now, so I don't move that trend line. That's the darn thing. I'll do it this way. Turn those off. Grab where we're at now, and tell you we'll probably come down here at about 170, 169.50 or so, and that's about another 7% drop. So, and we'll probably get a reaction. I tell you, if we get there, we'll most likely get a reaction. If we don't, this market's really broken because that 169.50 here, I'll color code it for you. It's a pretty significant support level. There were a lot of reactions along there. All right, guys, let me get this out to you. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it, and best of luck on your trades.